Welcome to Tax File. I am your host, Laure Bala Hassan, and today we've lined up an exciting and insightful episode just for you. We begin with a quick sweep through the latest happenings in the tax world, bringing you the updates that matter most. Our Did You Know segment is next, where we spotlight interesting practical tax facts you'll find useful. You also hear the voice of the people in our Vox Pop as we gather public opinions on key tax matters. After that, we take things a step further into the knowledge zone, unpacking those issues with clarity and deeper explanation. Our Professional Insight segment features expert perspectives to help simplify complex tax concepts. And finally, in What's on the Net, we respond to your comments and questions from across our social media platforms. It's a power-packed lineup. Let's dive right in. And now, the news. The Federal Inland Revenue Service, FIRS, now Nigeria Revenue Service, has successfully held the second edition of its Emerging Taxpayers Tax Clinic in Abuja, following the success of the inaugural clinic in Lagos. Ejura Etu Okwanachi has more.
The one-day event themed Tax Clinic for Tax Clarity Transitioning into NRS targeted small business owners, entrepreneurs, and professionals. It offered participants the chance to engage directly with tax experts, ask questions, and gain clarity on their obligations under the Nigeria's evolving tax framework, including the transition into the Nigeria Revenue Service, NRS. The clinic featured presentations, panel discussions, and service desks from partner institutions including the CAC, JTB, FCTIRS, NIMC, CITN, ICANN, ANAN, NBA, NMA, and many more, with free health checks provided by Nigeria Medical Association. Participants described the clinic as eye-opening and informative. Many said it helped them understand complex tax processes, simplified compliance, and gave them confidence to fulfill their obligations voluntarily. According to the Revenue Service, the tax clinic is part of a broader reform agenda led by Executive Chairman Dr. Zak Adedeji, aimed at fostering trust, transparency, and a culture of voluntary compliance across Nigeria. Participants praised the initiative for bringing the tax authority closer to the people and helping taxpayers feel more informed and empowered.
Meanwhile, the Federal Inland Revenue Service, FIRS, now Nigeria Revenue Service, has commissioned a new compressed natural gas (CNG) plant at its corporate headquarters, marking a significant step in promoting cleaner energy use within government institutions. Our correspondent Aisha Abdulkader has more.
Speaking at the commissioning, the Executive Chairman, Dr. Zak Adedeji, highlighted the initiative as part of the agency's broader commitment to sustainable and operational efficiency. He explained that the adoption of CNG technology aligns with President Bola Tinubu's Renewed Hope agenda, which emphasizes energy transition, cost reduction, and environmental responsibility. Adedeji noted that the plant will not only reduce reliance on traditional fuel sources, but also serve as a model for other public institutions seeking innovative energy solutions. The project underscores the service's determination to integrate modern infrastructure into its operations while supporting Nigeria's national energy transition plan. By embracing cleaner energy alternatives, the agency aims to cut costs, improve efficiency, and contribute to reducing carbon emissions. The commissioning ceremony was attended by senior officials and stakeholders who commended the initiative as a forward-looking move that strengthens the top revenue service role in driving sustainable development across the country.
The Nigeria Revenue Service (NRS) has drawn public attention to the stringent penalties for tax evasion and fraudulent activities as explicitly provided under the new country's tax laws. Individuals and corporate entities found guilty of serious tax offences now face severe consequences, including a penalty of up to 10 million naira and potentially a 10-year jail term upon conviction. Hussein Ibrahim reports.
As the new tax law begins, these legal stipulations, as reinforced by the service, cover a range of offences, including but not limited to the deliberate failure to deduct or remit taxes, the submission of false statements and returns, and the obstruction of tax officers in the lawful performance of their duties. The Nigeria Revenue Service is empowered by law to prosecute offenders fully, ensuring that all tax-payable persons and businesses fulfill their civic obligations. This move is part of the broader strategy to enhance voluntary compliance, broaden the tax net, and create a level playing field for all economic actors. Consequently, the NRS urges all taxpayers, including companies, partnerships, and individuals, to ensure strict and prompt adherence to their tax responsibilities. The service advises consulting its offices or official channels for clarification on any tax matter to avoid violations. By upholding these regulations, the NRS aims to safeguard the nation's economic base and foster a culture of accountability, which is fundamental to achieving sustainable growth and funding essential public services for all Nigerians.
And that's a wrap on the news. Let's join Mariam on the Vox Pop segment.
Hello and welcome to the segment. My name is Mariam Julie Adura. We bring you greetings from Katampe in Abuja. Today, we'll be looking at what the tax obligations of a company with a turnover of 50 million naira and below is. Come. With a company turnover of 50 million and below, what would my tax liabilities be?
Okay, a company that has a total turnover, that's annual turnover of 50 million and below, is defined by current legislation as a small company. Yeah, even though that definition also covers a company from like turnover from 0 to up to 100 million, but for 50 million and below, or let's even take it from 25. If your turnover is 25 million for a start, you're not expected to pay tax. Company income tax on that turnover. Yeah, but above that, you're still a small company, but yeah, you're expected to pay a lower company income tax of 20%.
You know, before now, according to the tax law before, any company that has turnover of up to 25 million, they're supposed to register with Federal Inland Revenue Service and also file their returns. But you know, because of the changes in the tax law, the government decided to, move the threshold up in order to, assist most of these small companies. So if you have maybe a turnover of maybe less than 50 million naira, as you said, the company or the taxpayer has the responsibility to still file returns with the Federal Inland Revenue, even though they are not going to pay taxes. However, it will give the tax, authority the opportunity, to check and then confirm what the taxpayer actually files. So I think it's very, very important for, taxpayers to always file their returns with the Federal Inland Revenue Service, because failure to file returns with Federal Inland Revenue Service, at the end of the year, it may attract, a penalty of late filing, in which we normally call it LRP, late return penalty. So it is always important for taxpayers to, to render their returns, both VAT and the CIT, at the end of each period that it relates to.
For a company with a turnover of 50 million and below, you actually do not have to pay tax. But not paying tax, when we're talking about not paying tax, this is as regards to company income tax. You are not paying company income tax because the new law, the new tax act that has just been approved by the president exempts the company from tax payment. But however, the company has a responsibility to file its return, that is for company income tax, as at when due, depending on the company's financial year end. But for VAT responsibilities, the VAT Act says that the NTA says that for companies or small businesses that have turnover of 100 million and below, they are not liable to also file VAT on a monthly basis. But however, a company can choose to exempt itself from that rule. So the company can register for VAT for purpose of compliances.
For a company that makes 50 million naira and below, what would the tax obligations of such a company be?
Okay. For a company that makes 50 million below, the company is expected to file its tax returns annually, but will not be liable to pay any tax at all.
With this new regime, the Nigerian Tax Act 2025, effective 1st of January 2026, companies having turnover of 50 million naira and below are classified as small companies and are not expected to pay CIT, that's company income tax, but they have other tax obligations. As we say, tax exception does not mean exception from filing. Even though you are exempted from paying company income tax, CIT, because they are taxed at 0%, they are expected to file their returns as and when due. For an existing company, they are expected to file 6 months after their year end. And for a newly incorporated company, they are expected to file 18 months after their incorporation, or 6 months after their year end, whichever is earlier. So that's for company income tax. But that does not mean that they don't have other tax obligations, like I said. It is possible for them to be tax agents. So if they are tax agents, which means they are not the one paying, but they are helping the NRS to collect. It could be withholding tax for every maybe contract issued out. The company, the contractor now getting the contract, we have to pay withholding tax, and at that point, that small company is serving as an agent of tax collection.
Did you know if your company's turnover is below 100 million naira, you are exempt from tax? For more information, please visit www.firs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had on the streets. I remain your host, Ashu Abe. The question today is, if your company's turnover is below 50 million, will you pay tax? So if your company's annual turnover is below 50 million, you are well within the small company category, as the critical threshold in this law is 100 million and below, provided your fixed assets also don't exceed 250 million naira. Then under Nigeria's Tax Law Act, you would qualify as a small company. As a small company, you would pay 0 corporate income tax and also be exempt from the 4% development levy. But note, even though you pay no CIT, you should check whether there are other taxes, for example, VAT registration, withholding tax, that apply to your business depending on its activities. Over to you, Lorraine.
And now to our professional insight segment.
Tax evasion is any omission or an act by a taxpayer to deliberately, fraudulently reduce its tax liabilities. What this means for the country is that government is unable to have access to the needed funding to provide social amenities. In the FRS 2022 report, the tax to GDP ratio of Nigeria was put at about 11%, when we have some other countries in Africa having as high as 25 to 28%. What this means is that the Nigerian government is losing money on a yearly basis, monies that would have been available to do social infrastructure. Therefore, tax investigation is a needed tool to correct this anomaly and ensure that all the needed revenue are brought into the government coffers for government use. According to the enabling laws of the FRS investigators have different powers with which they conduct their activities. There is power to access your land, there is power to request for information, there is power to freeze your account, power to investigate, and a whole lot of them. However, different strategies are deployed when these powers are brought to use. The FRS makes sure that its tax investigation officers carry out a very detailed risk analysis, which tells us the areas of focus. There are times that you have tons and tons of data, but your risk analysis will provide you the exact data that you should be looking at, which is the most important. The FRS as an institution has also developed its own in-house data mining tool by the name of Tax Promax. This platform provides investigators a first-hand analysis of the tax returns submitted by taxpayers. They don't see this at the front end, but the tax officers see this at the back end. And from that point, they're able to determine which company to review or audit or investigate. There are also collaborations with third parties, such as the banks, the customs, the Nigerian Communication Commission, any agency that warehouses data, because data is life. You need data to be able to prosecute, to identify, and go after any recalcitrant taxpayers. The challenges that tax officers face during tax investigations are enormous. Chiefly among them is the lack of records by businesses, followed by the resistance of these businesses to even allowing the tax officers carry out their duties. The issue around access to third-party data is also key. And while we also have issues around political interference by the bigwigs who would stop you from doing your work, the challenges are enormous. There's also the issue of slow process in the area of judicial arbitration. When a taxpayer, wants to take the legal angle to resolving issues with you, it takes time for these things to get executed. So to mitigate against these challenges, the FRS is now following the big data, which involves the data analytics, using the platforms that I've earlier highlighted, Tax Promax, the data mining from third parties, and as well training and retraining its staff to ensure that we minimize the incidences of corruption during tax investigation exercises. And the best guide for any tax officer is to follow the tax investigation manual, which will safeguard you even when there are interferences on the cases that you handle. The end result of tax evasion is to reduce the tax liability. Therefore, the taxpayer focuses on anything that will reduce his income illegally in this instance, or anything that will make him have access to claim fictitious expenses and tax reliefs. So if you check the books of a taxpayer, it is either income is being suppressed or expenses are being inflated. It can be taken through whatever scheme. It can be a scheme to declare losses persistently, a scheme to increase and doctor falsify records. Whatever the scheme is, the main purpose is to reduce the tax liability. The FRS has now introduced the e-invoicing platform, whereby all the invoices that must be that would allow you to have to claim input VAT are now being directly channeled to that platform. You, the taxpayer, can view them and take advantage of the reliefs that are available, while the tax authorities also can deliberately see them anytime the platform is engaged. There's also the solution around country-by-country reporting. This is to cover international corporations who have businesses across the world. Instead of under-declaring their income in Nigeria by way of not telling the truth about their operations outside the country, the Nigerian tax system has also gotten a buy-in into the country-by-country reporting and ensuring that all international entities report their activities in all the countries that they operate, thereby giving little or no room for under-declaration of their operation. Artificial intelligence is the current trend, and the FRS is not left behind in this trend. Modules have been developed in the back end to ensure that the service take full advantage of AI. In the interim, the service is deploying and using the existing platform to mine data from all our third-party partners towards having a very good tax investigation exercise whereby all evasions are identified and dealt with adequately. Data mining and access to third-party platform has greatly helped the tax investigation department in uncovering tax evasion schemes.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. Temitope is asking, please, I made a payment through Flutterwave for VAT on Tax Pro Max, but the payment has not reflected. Temitope, if your VAT payment made through Flutterwave hasn't reflected on Tax Pro Max, it could be due to a delay in payment confirmation or a mismatch in the transaction details. Taxpayers are advised to wait a short while, then check their payment status on the platform. If it still doesn't appear, you should contact the FIRS help desk or visit the nearest tax office with your payment receipt for quick resolution. Victory is asking, is it possible to register or validate the FIRS team on CAC certificates through FIRS Contact Center without visiting your office? At Victory, you can register and validate your team remotely by visiting the Tax Pro Max website and following the registration steps. This eliminates the need to physically visit an FIRS office.
And that's where we'll leave it for today's episode of Tax File. I trust you've gained valuable knowledge and a better grasp of the tax issues that matter to you. But remember, our conversation continues beyond the show. Join us on our social media pages. We look forward to engaging with you. Until next time, I am Laure Bala Hassan. Stay enlightened, stay compliant, and keep watching Tax File.